It's W from W Investing here to do a quick video and update on Netflix stock. After the bell, Netflix reported earnings and dropped over 16% to around the $85, $86 range. This is a chart today before the close, and as you can see, it closed around $100, but it's going to drop all the way down here in this range tomorrow, down 16% after earnings. And a lot of people continue to ask me, why does the Netflix stock continue to go down, and how did you know to get out? I'm going to tell you a little story, and you're going to find this pretty funny. I bought Netflix at $115 a share a few years ago, knowing, or not knowing, we never know for sure, but predicting that, this is a strong company. I bought in this area here, right around here probably, and I held all the way to $275 a share, right around here. And it went up to $300 a share, but I got out at $275 because I could see the writing on the wall. And a lot of my friends and family members didn't believe that this company could not, go to the roof. Everybody has Netflix. There's no streaming videos, the future, I heard it all. But, I have a few market indicators and a few little secrets of my own that I tend to use to predict tops. And I did a pretty good job with this one. So I got out at 270 after being in from 115. So, I had a quick double and more than a double, and I made my money. Let's just say that. So one of the reasons Netflix stock continues to go down is the CEO is not good with the public, to say the least. He made a mistake and increased subscriber fees right around this time and didn't really tell anybody until they got their next bill, and then their bill was much more than they expected. And then instead of addressing the issue, he wrote a quick blog post at about 11:30 at night and just uploaded it and didn't really have a public statement that he apologized. He didn't go on CNBC. He didn't go on CNN. He just wrote a quick, Twitter-sized blog post, and that was it. This is probably the worst thing you can do. And from that point, it was carnage. It went straight down. And recently, it found a bottom around $70 a share and tried to work its way back up. Had a decent earnings report, but then it tanked. It's going to tank again tomorrow. And honestly, wouldn't surprise me for it to go back down to these 2011 lows around $65, $70 a share. So when we look at the total assets for Netflix on ycharts.com, and I'll put a link to ycharts because I love this site. But when we look at the total assets, you look at this and you would think that, this is a company doing really well. They've went from 500 million in total assets in 2010 here, or actually late 2009, and they're over they're about 3.05 billion in assets. So how could the stock price go down? Well, anyone who has invested money knows that earnings per share is very important. You want earnings per share to increase quarter over quarter, honestly, as much as possible. Some of the better stocks, they're increasing earnings at 40, 50%. Apple, when it was really powering higher, was increasing earnings at 75%. They're selling great products. Well, if we look at the earnings per share growth of Netflix, you see a huge problem here. During that uptrend, it was, between 59, 48, 34, 58, 88, 57% higher quarter over quarter. And now we see that in December of 2011, earnings per share was down 27%. This is just the nail in the coffin of a growth stock. Growth stocks cannot have earnings per share down 27%. A lot of this was because of the CEO mishandling the situation. A lot of it has been subscriber growth. It's just been terrible. The big number with Netflix with the earning is subscriber count and subscriber growth. The reason we're tanking, or Netflix is tanking after the bell today, is subscriber growth is terrible again. This would not be a stock I would consider buying. Looking at this chart, it's just ugly. The 200-day moving average is just falling off the face of the cliff. It tried to break through its 20 and 50-day moving averages recently, but those are going to drop like a rock in the next few weeks. So that's basically why Netflix stock continues to go down. And a lot of people will ask, should I buy? That's up to you. I gave you many reasons why I don't like the stock. Take my advice for what it's worth and how much you paid for it, which is absolutely nothing. But do recognize that earnings per share has slowed tremendously. And if you're looking for growth stocks, you really want to look for growth stocks with earnings per share that increase. I'm not giving you a buy signal. I'm not giving you a sell signal. I'm just telling you how I feel and telling you about my past experiences. If you want more on my stock picks, go to W Investing. And once again, they are what they are. I don't charge for them. I'm not giving financial advice. I'm just doing this all as a recreational hobby.